Hey guys, welcome back to Chaos Incorporated. Thanks for checking out the video. If you don't mind, take a second there to like and subscribe, get the word around about the channel. This video is titled 2020's A Decade of Depression. It's a follow-up to a previous financial video I did on the global financial crisis called Is It Time to Panic? As is the system beyond all repair? And I think it is. In that video I laid out a few things, how the COVID shocks have disrupted a 40-year trend in money printing from the time the U.S. got off the gold standard. We basically went from a complete all-around manufacturing economy into a paper-printed economy. So General Electric stopped focusing on factories and they started selling credit default swaps on housing in East Europe. And that eventually led to the company becoming just a shell of what it is now. IBM, a lot of these former American powerhouse companies have just a shell. They outsourced everything. And today you see the results. They're really struggling. So some new companies have taken their place, in particular America Big Tech. But in general, you have a 20, 30-year decline in overall manufacturing. Car production and sales in the U.S. is lower than it was 20 years ago. We haven't built an oil refinery since 1977. China's built 209 refineries in that time, including state-of-the-art. Everything's new. All their infrastructure's new, and everything in the U.S. is dilapidated. Stay tuned for the electrical grid. We're going to wake up here maybe this summer as we get rolling blackouts. It's been warned. Oh, by the way, all your electrical grid infrastructure is 40 to 50 years old now. Your bridges are 80 years old. People are living in 80, 90-year-old homes in the Rust Belt, but yet we've had record economic growth. So the country is delusional at this point, no longer can tell what is real growth and what is just money printing. So that takes care of the last video. I did talk about, as I mentioned, 40 years of stuffing banks with money has disrupted all the price signals, and now the bill is due. So it's time to pay the piper. We're in for, as the subject of this video is, a decade of depression in the 2020s. It's going to take 10 years to unwind this and rebuild at a minimum. That's if you realize you have a problem. We're like an alcoholic or a heroin addict that still hasn't realized you have a problem. To this day, the politicians get up and say we have the best economy in the history of the country. It's absolutely ludicrous. So we went from COVID shocks. We printed 80% of the world's money in a year. That created the inflation. Normally, when we print that money, it goes out into the world and gets dispersed amongst the real economies that produce the goods and then send them to the U.S. for the printed green tickets. That didn't happen this time. Something changed. Something broke. So the inflation spiked here. We probably printed way too much money. I believe the U.S. printed $6 trillion in the last year. Europe printed $3 trillion. You look at the mortgage-backed securities. They're still buying from the great financial crisis. As of last month, they were buying mortgage-backed securities, printing money, shoveling money into banks. You saw Europe is still doing it. They still are buying mortgage-backed security type instruments. They're still printing money. Even when places like Germany have 23% producer price inflation. We're being outgoverned in the United States, the government and the West. The people running these things are frankly incompetent and morons, knaves at best. So you've had $9 trillion of wealth disappear, according to J.P. Morgan. And what I talked about in the last video is the impending credit event. What's going to break? Something will break at some point. We don't know what that is. In 2008, it was housing. That broke the credit default swap. That crashed the derivatives. That crashed the entire credit market. Couldn't get a house loan. Couldn't get a car loan. U.S. and others printed $20 trillion, flooded the system, flooded the zone with money. Problem is, it never got corrected. The banks that were too big to fail back then are bigger now. They're 5 times the size. So these things are all exponential. When we didn't clean up a $20 trillion, we didn't clean up the problem with a $20 trillion print. This time would take a $200 trillion print. I don't think we have it in us. Because of the inflation, it's different this time. So last time we were looking at deflation. This time it's inflation. The more money we print, the more it's going to drive up prices. So the only real solution out of this, and I'll talk about this in a little bit, is fixing supply chains, getting real productive capacity on board. When you look at not a new oil refinery since 1977, yet you add 100 million people, that's not productive capacity. Something's gone wrong in the system. So where does that get us today, and what do we think is going to break? I believe the Dow is down 17% for the year. As I talk to you here today, it's the 23rd of June, 2022. The S&P is down about 13%. We've had a couple days of rally. These most likely are bear market rallies. There's still a lot of this system to unwind. The growth stocks got hit first. As we all know, they were up massively in the last year to 2 years. They're now down 70 to 90%, depending on the stock. Many of these companies have no revenues, and most of them have no profits. So the market has pivoted. Now it's looking for who's got cash flow and who can actually make money. That's going to be more and more difficult as time goes on, because supply chain disruptions and inflation are going to totally dismantle earnings at most of these companies. They just can't do the output that they want to do. They don't have the parts. Semiconductors are still a problem. It's going to be 2025 before that's fixed. Talking about housing has not crashed yet, but it looks like it's always the lagging indicator. The 2008 financial crisis, it took about 3 years, 2013, 3 to 5 years before it finally totally bottomed out. But we are seeing the mortgage markets down more than 50% year over year. Mortgages for the average people have doubled. And what's really shocking is we now have 15 million Americans more than a month behind on rent. That's about 8% of the total rental market. Okay, commercial is 30%. 30% of the people are not paying their bills. And this is a problem stemming back from COVID. So what happened? We stuffed the banks full of so much money, we didn't even see a commercial real estate downturn. That's coming. E-commerce is shifting that as well. Back to work is not going to happen. We've stuffed the banks to protect them from all these losses that they would have seen. Those losses are still coming. Now the housing, it's been up 30, 40%, depends where you are. Most of that will get reverse sucked back out of the system, especially as now mortgages are double for the same house that they were a year ago. And that may not let up. The Fed still has to keep moving up interest rates. As long as the inflation is high, they're going to keep up moving the interest rates. Why are they going to do that? Is they have no choice. So where we are in the world today is we're living in a 0% bank interest. You get 0% on your money. You pay 20% on your credit card. And key is inflation even at 8 to 10% a year will kill everybody, especially people on fixed income. How does that work? You do the compounded annual growth equation. Say 10% inflation a year at 5%. 5 years at 10% is going to give you about 62% inflation over that 5 years. Let's draw this out. 2022 to 2030, that's 8 years. People's bank accounts will be worth nothing in cash. So you're getting 0%. Let's say you have 100K in the bank. Your 100K by the end of this decade is going to be worth 20K. Your pension checks, your 401ks, with the stock market going down or maybe just flat, you're not going to add to the 401ks. Pensions will be underfunded. The government has no printing escape valve this time. They can't print enough money. It just drives prices up. Foreign governments have stopped buying U.S. treasuries. So United States, China has not increased their treasury since 2018. They haven't bought a Boeing airplane in 5 years. Russia's obviously not buying. We have, with the sanctions on Russia, we've basically destroyed the U.S. dollar as a safe haven. That was our last get-out-of-jail-free card, which is now gone. We tore it up. So what do we think is going to break? We talked about $35 trillion or so has been printed since the Great Financial Crisis. Between Europe and U.S., $8 trillion printed in the last 18 months. All that money's got to get sucked out. What's going to probably break, in my opinion, is the Japan. So while everyone's paying attention to crypto, we went from the tech stock crash to regular stock market crash. Crypto, we've got $1 trillion taken out of crypto. This rolling tsunami is going to go across financial markets. It's already going into housing. We're seeing the downturn. But what may really be the tipping point into the next credit event will be Japan. Just last week, the Japanese government had to buy $81 billion in bonds. They every week go out and are most of the market. They are 140% debt to GDP ratio in a country with terrible demographics that's losing population every year, year over year. I believe last year they lost more than 1.5 million people population-wise this year. Roughly, there are 120 million people. They're forecast to get down to 57 million people. Their companies are not competitive anymore. The Sonys have lost way to the Samsungs. The Toyotas are getting outcompeted by the Kias and the Hyundais. So China's taken the lower value chain part of it. So Japan in general has been living off money printing. They've been the source of the so-called carry trade now for decades, where people could get cheap money and deploy that all over the world. And when I say people, I mean banks, not you. Of course, we pay 20% on our credit cards. Banks deploy all this cheap carry trade money all over the world. This is broken. So Japan has had to do extreme moves into the markets in the last week just to stop it from collapsing. Their rates are spiking up, from negative to 2% in a day or 2 days. The bond market is over 1 quadrillion yen. That's $10 trillion. This thing, when it breaks, could set off a new Asian financial crisis cascade. But it won't go to Japan to Asia. It'll go Japan to Europe to United States. Japan could break. Europe looks like it's breaking already. Putin is shorting deliveries to Europe now in the Nord Stream 1 pipeline. He is not allowing them to build up a gas and oil reserve for the winter. We're going to see European energy prices spike uncontrollably this winter. Their industries largely shut down. They're going to be rationing energy. And it's going to just set Europe ablaze with populism. And I think Putin's gambit there is to get Europeans themselves to start put a pressure on a final diplomatic solution here to get Europe back on track. But even before all this happened, you look at the list of unicorns, billion-dollar startups. There's only a couple in Europe. They're all Chinese and American. The socialist European system, while a great, it's a nice place to live. They have health care, but the capitalist core of Europe is not functioning properly. And they need to get back to their roots and see what it's going to take. Get that German industry powered again. Get that Italian industry powered again. And what they're going to have to do to revitalize, the core economic conditions of Europe. It's not going to happen with the energy crisis and some pretty poor demographics in Europe. Everybody's shrinking, as we know. So that's where we are today in the world, the financial crisis. I think we've got 10 years of this to unwind. How bad it gets, I hope it doesn't get too bad. It is probably unlikely at this point that we avoid a credit event. A credit event is going to mean there's no house sales, there's no car sales, there's 20-30% of layoffs. The Fortune 500s I talk to now already see the market softening. They've put in hiring freezes. Some are getting ready for layoffs. That'll be the next step. So everyone better bunker down and survive. Make sure you've got cash, you're liquid. Be careful of bear market bounces in these markets. They will only come back when the war ends and when we get back to money printing. That may not happen. This may be the end of the money printing days. It's been long predicted, but never realized. But I think we're finally at this end stage. What this will all bring us is basically a decade of depression. The 2020's are going to look like the American 1930s. So we seem to be in a weird 100-year cycle where we had the Spanish flu in 1918. We had COVID of 2018, 2019, 2020. Now we're moving into the wars. That started. We're at the foothills of World War III. that continues to escalate, we are sleepwalking into a NATO versus Russia situation, which will permanently impoverish the West. China will scrape everything up. We are moving into an era of the end of the golden billion. So you see Putin, China, they're cheerleading this to the rest of the world, that these Americans and Europeans consider themselves the golden billion. They print all this money, they send it in the world, and they demand goods. So the rest of the world has to get the labor, get the raw materials, manage the electrical grid, do all the production, do all the sweat labor, and get you goods, and then you print tickets for them. Doesn't make sense. That system's coming to an end. Putin has basically called time on it. So it's the end of the money printing. It's the end of the American free ride. People are going to have to rebuild. There are some positive aspects I'll cover in some future videos in U.S., particularly around chip production. Not enough. American workforce is largely drugged out, apathetic, and not in a good situation. So you really need a renaissance of the whole country. Where that's going to come from, I don't know. That may come after the Depression. So as the old saying goes, hard times build strong men and soft times build weak men. And we're back at the time where weak men are going to inherit a lot of troubles. So with that, I'll leave it to you here. I'll be out in Europe for the next few weeks, 3 weeks actually. I may do a video from the road. I may not. We'll see how it goes. But until then, be ready, and we'll talk to you soon. Thanks very much.